Well, good morning. The topic of the day is new policy surrender value rules. New policy surrender value rules. The Insurance Regulatory and Development Authority of India, after multiple revisions in the past, has come out with new updates on regulations regarding the surrender value of life insurance policies. These rules have been made clear that the special surrender value offers policyholders the opportunity to receive a portion of their premiums back even if they exit from the policies after just 1 year. So the IRDAI move is likely to boost liquidity and flexibility for life insurance customers who may wish to switch their policies. The special surrender value calculation will be based on several other factors, including the policy's terms, premium paid, and the duration for which the policy has been active. The exact formula for calculation of surrender value may vary insurer to insurer, as the value is arrived at by typically considering factors such as total premium paid, policy duration, and the surrender charges are applicable. So while deciding on the surrender value, insurers shall ensure reasonableness and value for money to all type of policyholders, including surrendering policyholders and continuing policyholders. So in its master circular for life insurance business released on June 12, 2024, the IRDAI has said that the special surrender value needs to be at least equal to the expected present value of the paid up sum assured on all contingencies covered and paid up future benefits such as income benefit, if any, and accrued vested benefits duly allowing for survival benefits already paid, whatsoever name called, if any. So SSB calculated as above. SSB means special surrender value, shall become payable after completion of first policy year, provided one full year premium has been received. So provided for policies with limited premium payment term of less than 5 years and single premium policies, a special surrender value shall become payable immediately after receipt of first full year premium or single premium as applicable. So for those unfamiliar, surrendering a policy means you are fully withdrawing or terminating the policy before its actual term ends. The surrender value which is paid to policyholders on surrender is determined as the higher of the guaranteed surrender value or the special surrender value. So until now, if you were surrendering your policies within 2 years of starting a policy, there was no provision to refund. But now if you buy a policy and pay the premium for one full year, you will be eligible for a refund of premium. So, surrender value in term insurance refers to the amount of money an insurance company pays to the policyholder if they decide to terminate their policy before its maturity. It applies only to those term insurance policies with a surrender benefit. When a policyholder opts for surrender, the insurance company calculates the surrender value based on the number of premiums paid, the duration of the policy, and other factors. The surrender value is usually a percentage of the total premiums paid minus any applicable charges or fees. It is important to note that surrendering a term insurance policy means that the policyholder forfeits the death benefit, which is the policy's main purpose. Therefore, surrendering a term insurance policy should only be done after carefully considering one's financial situation and insurance needs. So the IRDAI rule says that anyone with a term plan can give up their insurance policy. However, only after the policy has been in effect for 3 years will the policyholders get the payout of the surrender value. Now, there is a change because the current provision surrender of the revisions are in favor of the insured. Say, after the initial draft shared in December 2023, the IRDAI in April 2024 announced planned to back down on surrender value proposals in December 2023. By May 2024, they introduced a framework to implement the increases and invited insurers to submit feedback and seek potential relaxations on the proposed special surrender value increase by May 31st. Now, the master circular issued on life insurance products also announced about a simplified customer information sheets, training programs, mandatory policy loans to enhance liquidity, introduction of variable annuities, extended free look period, a robust process to address customer grievance, and higher value of customers on early exits should further the regulator's vision of insurance for all by 2047. So if a policyholder wants to exit the life insurance policy during the initial years, he'll get a higher refund from the insurance company now. After several rounds of discussions and proposals, the IRDAI has ordered a higher special surrender value for traditional endowment policies. Now the policyholder will get a part of his premium back even if he exits after 1 year. So this will indeed offer more liquidity and flexibility to life insurance customers if they want to switch their policies. So what is the special surrender value rule proposed by IRDAI? In a master circular for life insurance business dated June 12, 2024, the IRDAI said the new provision that this special surrender value should be at least equal to the present value of paid up sum assured on all contingencies covered, paid up future benefits, and accrued vested benefits. So, paid up value is calculated as per a formula: number of premiums paid into sum assured, one total number of premiums payable, to arrive at the expected present value of the paid up sum assured and paid up future benefits. RDI has specified a maximum spread of 50 basis points over 10-year GSEC. For the applicable special surrender value shall be reviewed annually based on the prevailing yield on 10-year GSEC. Let's assume a policyholder pays an annual premium of ₹50,000 for a 10-year policy with a sum assured of ₹5 lakh. Now, after 4 years, he wants to exit the policy. He has accumulated a bonus of ₹40,000 till now. He has paid a premium of rupees 2 lakh in 4 years. So let us understand how much more he will get as per the new surrender value. So according to the earlier rules, 50% of the total premium must be paid if a policy is surrendered between the 4th and 7th years. You would have got rupees 1.2 lakh back, 50% of total premium rupees 2 lakh and bonus rupees 40,000. So if you had left the policy after 4 years, according to previous surrender value norms, now with the special surrender value norm now, you will get back rupees 1.55 lakh. So higher surrender value when you return policy after 1 year will be paid. Moreover, the policyholders will be eligible to get a refund even if they leave after the first year. Earlier, if a policyholder exits a life insurance policy after 1 year, he would have lost his entire premium. Now, IRDAI has said SSV calculated as above shall become payable after completion of first policy year, provided 1 full year premium has been received. Provided for policies with limited premium payment. Terms of less than 5 years and single premium policies, a special surrender value shall become payable immediately after receipt of first full year premium or single premium. So let us consider another example. A policyholder bought a 10-year policy with a sum assured of rupees 5 lakh. He pays a hefty premium of rupees 50,000 in the first year. Now, if he leaves the policy after 1 year, he would not have gotten any refund from the insurer. So he will be eligible for a refund even if exits the policy after a year. So if the insurer has received the premium for the full year, they have to return rupees 31,295 to the policyholder. Further, the insurer must mention policy-wise guaranteed surrender value, a special surrender value, and payable surrender value separately at the benefit illustration. So IRDAI has made it mandatory for the insurers to provide a customized benefit illustrations to prospective policyholders along with a prospectus while selling a policy. Such benefit illustrations shall be signed by both the prospective policyholders as well as the insurance agent or authorized persons of an intermediary or such other distribution channel persons of the employees of the insurer involved in the sales process as the case may be, and shall form part of the policy document. Now, IRDAI asked insurers to implement this special surrender value rule by September 30, 2024. So, the life insurance new rule, the move is in favor of the policyholders. Those who are stuck with a wrong product due to the rampant mis-selling that has become quite prevalent in the insurance sector will get a higher amount back now. So the provision of higher surrender value calculated at a prevailing 10-year government securities rate with a limited spread significantly increases the value returned to policyholders in the event of a policy surrender after the completion of the first year. IRDAI faced a lot of backlash from customers advocates for giving in to the demand of insurance companies on guaranteed surrender value a few months back. With the new master circular, IRDAI has tried to compensate consumers by tying a special surrender value calculation to a discount factor based on GSAT. It is a welcome step and would help end customers in receiving higher surrender value. The regulator also said that the insurers can offer higher guaranteed surrender value than those specified in the regulations These values may vary with premium size, premium paying term, policy term, the duration elapsed at the time of surrender, and other relevant factors as applicable. So this special surrender value rule will apply for only new endowment policies. New surrender value norms introduced by IRDAI will apply primarily to new endowment policies issued after the implementation of the guidelines. So with just a month left until the new surrender value regulations take effect, few days left. LIC's, the country's largest life insurance company, has approached the IRDAI seeking a revision of these regulations. But that is not possible now because the time has come to implement them. And the IRDAI has made up its mind to strictly apply them to all the insurance companies. Because after multiple revisions in the past, it has come out with new updates on regulations regarding the surrender value on insurance policies. Thank you very much.